I want to share with you in today's conversation five financial skills that can save you actually hundreds of thousands of dollars. Okay. And so, five financial skills for small business owners. The thing is that when you think about the top skills you need to really have if you are a small business owner, most of the time entrepreneurs don't think about financial skills. Entrepreneurs think about sales skills, negotiation skills, maybe skills when it comes to marketing, but rarely do they think about acquiring some financial skills. If you are a small business owner, you do not have to actually reach out to an accountant or a bookkeeper to actually do all of your finances. Part of it you have to do yourself. It's important because it's going to help you actually acquire some autonomy when it comes to analyzing your financial data, but also most importantly, how to really plan your business over time. Remember, running a business is not a part time affair. It is a full time affair. Even if you have a full time business, a full time job, when you run a business, you will still have to pay attention to a few details. So, the first financial skill that I want to share with you as a small business owner is actually sticking to a budget. Really important from A to Z. When I talk about budget, I'm not talking about something that you have to do just let's say as a one-time scenario. No, it has to be constant. Maybe you can prepare your budget for a month, for a quarter, or a year, but it has to become routine if you are trying to really if you're trying to really analyze your business in a scalable manner. So at the heart of every business, every successful business, is actually the ability to budget. So knowing actually how much money you are making and spending every single month is absolutely essential for your business's health. And so monthly budgeting helps you know if you are making a profit and if so, how much, right? It also helps you track client spending habits from month to month or year to year, for instance. Finally, good budgeting is essential in making sound business decisions. So many companies have to tough it out through lean months during certain parts of the year. So tracking your finances shows you what you can and cannot afford to spend, and when you might need a business loan to survive a cash crunch. Because when your business grows through let's say the value of death, so to speak, you better have enough cash to survive. Okay, so budget is going to help you big time. Actually, streamline those liquidity processes in lean years. So if you're thinking about five financial skills for small business owners, besides actually sticking to a budget, you also want to know how to set realistic goals. So setting realistic goals is the second financial skill that you as a small business owner you need to acquire. So successful small business owners will set smart goals. So when I speak about smart goals, I'm speaking about specific, measurable, achievable, results based, and time limited or time bound. Okay, so smart. And so when I talk about the smart, it's not just about a concept you hear in marketing as a financial skill. Even for small business owners, you want to really pay attention big time. So when I speak about setting realistic goals, I'm speaking about setting specific goals. So you want to be specific about what you want to accomplish in your business. You want to be specific about what you want your business to actually achieve within a specific period. You want to have measurable goals. So make sure you have a way to measure your progress. You can measure your progress through Excel spreadsheets or through software. Any way you can do it that works for you. Please do it. You want your goals to be achievable also. So keep your goals realistic and celebrate actually every success. I mean every single success. You want results based goals. So you want to tie your goals to specific objectives, like reaching a certain revenue level in a given quarter or given 6 month period. It has to be quantifiable. And finally, you want to have a time limited or time bound. So you want to set a time limit for your goals to help you stay focused. So when I say time bound, it can be within 3 months, within 6 months, within 1 year, or you can say by December of this year or by January of next year. Anyway, you want to really limit your goals in a chronological manner. So you can use software, for instance, you can use accounting software to help you make, track, and achieve smart business goals. So knowing where you are today helps you set specific, achievable goals for tomorrow. So by keeping your finances up to date, the software also lets you measure results anytime, anywhere, and display them actually across any time frame. So that's really important from a scalability point of view. So the third skill that you want to acquire as a small business owner, the third financial skill is actually your separate business and personal finances. Now you might be thinking this is not a skill, but it is a skill because whether you have a sole proprietorship or whether you have a single member LLC or you have an S corporation or a C corporation, if you are an entrepreneur, you have to really get to understand the importance of separating business affairs from personal affairs. Okay, especially if you are trying to comply with laws not only at the state level but also at the federal level. Okay, so if you are a startup or solopreneur, it's all too easy to run your business from your personal bank accounts. This causes confusion when you are trying to measure business revenue and expenses, which can also cause trouble at tax time. So, to keep your finances clear and simple, you want to run your small business from a separate bank account, and you want to keep other financial accounts like a PayPal or Venmo separate too. Okay, so having a separate bank account and business email makes this easy, big time. Now, you can actually try to really open a business account at the same bank where you are at. Don't try to really to reinvent the wheel. You can open an account at the bank or the credit union where you are at. So you can have a personal account, but also business account. And those accounts will be separate and those accounts will be tracked separately. Okay. And if you use accounting software such as Quicken, Classic Business, and Personal, or you can use QuickBooks, you can use Zero, you can use Wave. Those software tools track your business and personal budgets separately for the convenience of working from one app while your business and personal finances actually remains segregated, especially if you are looking for a loan. If you're looking for a business loan, for instance, being able to separate your personal affairs from your business affairs is going to help you big time, especially if you're trying to show business data to a potential lender. So that will help you whether you're looking for a personal business loan, a business line of credit, or even applying for a business credit card. Another financial skill I want you to really think about if you are a small business owner is actually keeping great documentation and receipts. So remember, the top skills I'm sharing with you: sticking to a budget, setting realistic goals, separating business and personal finances, and now keeping great documentation and receipts. So in other words, you have to pay attention to your paperwork, making sure that your paperwork is really the only way for you to back up whatever claims you have. For instance, on your tax returns, on your business tax return, okay, the IRS is going to ask you to actually back up the expenses you are writing off on your tax return. So be very careful in terms of keeping receipts. Okay, so while record keeping might not be the most exciting part of, let's say, owning a small business, it's definitely essential because not only you are dealing with regulators, tax authorities, but also investors and also lenders and also some stakeholders. Maybe your business partners will want to see your business financials, for instance. Clients, some suppliers who want to really see proof that your business is actually legit. So keep a record of every transaction so you will know how much you are really making. Plus, you will have all the documentation you need come tax time. Okay. So and it doesn't matter the legal structure of your business. It doesn't matter if you are an LLC, you are a sole proprietorship, you are a partnership, you are an LLC, you are a C corporation or S corporation. It doesn't matter. It doesn't matter whether you're paying taxes at the business level or at the personal level, because you still need to prepare and file tax returns for the business. For example, if you have an LLC or S corporation is considered a pass-through entity, which means what? It means you're not paying any taxes at the company level. So for your S corporation, you don't pay taxes at the business level. For your LLC, you don't pay taxes at the business level. However, you will still need to prepare tax returns. So for the LLC, for instance, you have to prepare a return called 1065, Form 1065, and you have to file that form every single year. Okay. And if you have an S corporation, you have to prepare and file a form called 1120S. That's the form you have to file. But still, you don't pay taxes at the business level, but you have to file those taxes anyway. So accounting software will make it easy for you to actually like let's say to track expenses. Okay, so you need to keep a gigantic stack of receipts if you need to. If you don't digitize your expenses, okay. So you can also use your accounting software Snap and Store feature to actually store photos of your business receipts with each transaction. A lot of accounting software allow you to do that. Okay, so you're also able to track home expenses separately. So that's really fantastic. Also, the fifth financial skill that you want to really acquire this year as a business owner is understanding your survival metrics. So, understanding your survival metrics is going to be, let's say, foundational. Of course, sticking to a budget will help you run your business. Setting realistic goals will help you run your business. Separating business and personal finances will help you run your business. And as is keeping great documentation and receipts. But if something happens, every business at some point goes through what I call the valley of death. In other words, you're going to have situations where you're going to have lean months, you're going to have lean years where you are having a cash crunch. How do you survive during those times when times are tough, when you don't have enough revenue coming in? How do you survive? Okay. So every business has its ups and downs. That's the natural part of small business management. The key to surviving the downs is knowing your survival metrics. You got to have a clear idea about your survival metrics so that when the rough times come, you can survive. For example, what's the minimum revenue you have to bring in every month to meet your monthly expenses? In other words, if you want to break even, what's the minimum? If your revenue falls beneath that minimum for a few months, how long can you weather the shortfall? In other words, this actually has to deal with your liquidity resilience, okay? And what expenses could you cut today if you saw trouble ahead, for instance? And finally, how much revenue could you bring in quickly if you had to, such as by offering early payment discounts or putting your products on sale? So you always have to be very agile, and agility is going to help you big time, especially when it comes to survival. Okay, it's not about being lethargic. It's about taking action, being proactive, and you are able to use accounting software among other things to see this kinds of numbers, this kinds of survival tactics, survival numbers, and more. So you always know what you need to do to keep your business going in terms of revenue, in terms of what I call reserve. You want to have a certain monetary reserve to actually be able to weather all the lean months and years. Let me talk to you about the top benefits here. I shared with you the top skills. Now let's talk about the top benefits. So you want to have 5 financial skills as a small business owner. But the thing is that there are 7 benefits for improving your small business financial literacy. In other words, by becoming a better manager, you are going to help your business big time. The first benefit is that you are able to make informed decisions. As an entrepreneur, having a firm understanding of the financial implications of your decisions actually enables you to make informed decisions based on data and always analyze data in a very systematic manner. Okay, don't trust your gut when it comes to running a business. You have to trust hardcore numbers. So being financially literate means that you know how to analyze and interpret financial statements, identify trends in your business, manage costs, and quickly take advantage of new opportunities. Okay. Sometimes what looks like a good deal doesn't turn out to be as good once you understand things like the tax implications or cash flow impact of the transaction. Also, you have mastering cash flow management. So basically, you do not want to fall as a small business because of inadequate cash flow. So by improving your financial literacy, you can better predict and assess your business cash flow by building simple tools like monthly expenditure schedules, daily balance forecast, and other reports on your operational requirements. These tools will help you plan for the cash and credit you need on hand to operate and grow your business. Also, you have improving access to capital. So, the cool thing about a small business owner is that you are able to gain financial literacy real fast if you really want to. And financial literacy is actually essential to access capital. If your small business wants to access capital, financial literacy is going to help you. Lenders and investors will want to see income statements, balance sheets, and pro formas. Most also like to see a business that's managing its cash to support both current operations and future growth. So many business owners need to pay accountants or rely on bankers to prepare those reports, but nobody knows and cares about your business like you do, right? So by putting in a little extra effort, you can actually learn how to build the reports lenders and investors actually want to see before funding your business. And those reports actually include a balance sheet, include a financial, include cash flow statements, but also statement of profit and loss or statement of income. You are also able to effectively manage risks. So when you actually increase financial literacy, that's going to help you big time. Now, every business decision carries some form of risk. So understanding risk management is essential for making sound financial decisions for your business. So whether understanding the impact of variable payments, interest rate increases, or insurance requirements, mastering this critical component of financial literacy protects your business from financial pitfalls. So that's really important from a scalability point of view. You also have budgeting, planning, and forecasting. So knowing the difference between these things is a good test of your current level of financial literacy. Budgeting is allocating the money you expect to receive and spend, while planning involves identifying actions and resources to get things done. And forecasting is actually projecting performance into the future based on current results. And each of these tools has a place in achieving your business results, especially if you want to achieve things in a scalable manner. You also have the ability to navigate regulatory and tax compliance. So, small business owners often struggle to keep up with and adhere to complex tax regulations. However, failing to do so can result in severe penalties for the owner and their business. So, financial literacy is crucial for entrepreneurs to understand their tax responsibilities, prepare for their tax liabilities, and comply with various financial regulations, which can significantly reduce the risk of legal problems. Finally, you have the ability to boost confidence in financial discussions. So, having a solid foundation in financial literacy is actually quite essential when negotiating with suppliers, when negotiating with customers, when negotiating with lenders, when negotiating with investors in general. Okay, discussing terms with investors and VC firms, or communicating with employees about compensation. So, not only does it empower you as a business owner to approach these discussions with confidence, but it also helps you build trust among those critical stakeholders. Like, when you have financial literacy, you are going to gain confidence big time. Okay, so financial literacy can be a game changer for a small business owner, not only for staying organized, but also for strategic decisions that foster long term growth. So, improving financial literacy can transform business management, equipping you with decision making skills, planning abilities, and better communication regarding your business's financial health. Okay, so that's important. In conclusion, in today's conversation, I'll share with you five financial skills that you must acquire as business owner. I spoke about the top skills and also the top benefits, and finally the conclusion. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.